Welcome guys, in this video I'm going to show you exactly how you can draw your key levels so you know exactly where to take trades like this. We're going to go over supply and demand, volume, and at the very end of the video I'm going to show you a special little tool I use to make sure these levels are even more accurate. My name is Elder Santos, and if you don't know me, I have been trading for about 10 years now. Past couple years live with my students, just to give you a little bit of a look on my progress for the last year, so you know I'm not just some random guy spitting some bullshit at you. Every single trade, every single one of these days was live in front of hundreds of people, in front of my mentorship students who were able to follow and take my exact same trades, leading us up all the way to September. So far this month we're up almost $50,000 in 2 weeks. Let's get right into it, guys. So the first thing we're going to do is actually zoom out to the 4-hour time frame. Why the 4-hour? Because I like to go for intraday, day trades, and scalp trades. And for me, the 4-hour gives me the best possible levels to start off with. We're going to work our way down all the way to the 30-minute time frame. So in the 4-hour time frame, to make this simple, right? I'm only paying attention to levels that are in or around currently where price is. So now we're at all-time highs. So I'm looking for any massive move up or massive move down from the market. And when I find that, I'm looking to draw my consolidation or the neutral candle right before the explosive move up. So right here, we have consolidation before this explosive move up. Now guys, for supply levels, I will use the bottom body of the neutral candle or the consolidation as the bottom of the zone, the top wick of the neutral candle or consolidation for the top of the zone. And for demand levels, it's the exact opposite. I use the bottom wick for the bottom and the top body of the candle for the top. Another quick example right here, explosive move up, draw this, and then get the top body, the bottom wick. Now what I do is I work my way down all the way to the 30-minute time frame. I start on the 4-hour, I go to the 2-hour, I go to the 1-hour, then I make it as perfect as I can on the 30-minute time frame. So what that looks like is this. Let's go to the 2-hour and see if we can make these zones look even better. And what I want to do is basically just get the whole consolidation as we're breaking down, the whole wick as we're breaking down, and make these zones look better and better and better as we go smaller and smaller in the time frames. Now we're at the 1-hour. Can we adjust anything? We can make this here a little smaller, but what do you see on this, right? We have now another demand level right here with this neutral candle before the aggressive move up. We see the more zoomed out you get or zoomed in, you'll see all these other levels start to plot. Now, these are levels where I've seen big money take action, and the next time we get to that level, I want to pay attention heavy to the tape to see if those same participants are coming back in. Now, all the way down to the 30-minute where we make these zones as best as possible. As you can kind of see why we work our way down to the 30-minute, because these zones will shift, they will change, they will move. Now, a big thing we want to do to make these zones even better, right, to kind of add some more confluence is actually look at volume. So a lovely tool I like to use is called a volume profile. Basically, this just gives me a value area. Every single one of these boxes is a day session, right? Futures market session from open to close. And when the next day opens, a new box is formed. It has the yellow point of control, which is the volume level, right? Which is where there's the most amount of volume transacted at a specific price point on every single specific day. So I'm necessarily now looking for a level with a lot of volume in that level, because we know a lot of volume moves the market. For example, guys, this supply level right here, right? We see this consolidation before a massive move down. Not only that, we see a volume point of control. We see that this little level has had an insane amount of volume because that's where the point of control sits. So next time the market gets to that level, there's a good chance we're going to reverse and sell off. This is something I add into my chart and into my trading to actually make these supply and demand levels much stronger and much more accurate, and actually gives me an ability to add in size, because I'm still going to trade every single level, right? I'll trade demand, I'll trade supply. But if I see this right here inside a supply level, I'll be more aggressive. I'll put more size down. I'll expect a bigger move. Now, let's just redo this really quickly so you all know exactly what we're doing, right? Just a quick recap. Do this with me right here. We're on the 4-hour chart, right? Let's go ahead and remove this so it's a little cleaner and draw our levels, right? Right here. So anything close to us, this is a pretty ugly action, to be honest. On the 4-hour, we have obvious demand right here, right? If you don't see something on the 4-hour, I would wait till you get smaller and smaller. If you see a level and you're uncertain if it's a level, it's probably not a level, so leave it alone. All right, now we go to the 2-hour. Same thing again, see if we can find anything going on. Pretty aggressive move down right here, right? Let's go ahead and mark out this, where we're kind of holding right now. and we keep getting smaller and smaller in the time frame, and we keep adding more and more levels. See, these levels like this aren't that aggressive, right? We're looking for some aggressive move up like this. This wasn't that aggressive. There's no consolidation or neutral candle before this move up, so we're not going to draw much right now. Let's go down to the 1 hour and see if we can find anything new. This needs to get kind of moved right here, right? I like this demand level right here from this one big body candle. Now, when I'm looking for a supply and demand level, I usually want to see a big body candle like this with small wicks but massive body, or multiple kind of medium-sized big body candles in combination. Now back to this on the 1 hour. Can we make any levels better, right? We can make this one a little bit better right here. We can make this one, honestly, there's no neutral candle consolidation before it, so we can just use this right here. Do we see anything else right here? Not any good explosive moves up, so we're kind of far away from any key levels. Right here, we have a neutral candle before a couple nice candles that moved up. So right here, we're going to mark this right here. So how do we actually invalidate these levels? I'll go over how to play these levels at the end, but also how do we invalidate this? So on the 30-minute time frame, and it has to be the 30-minute, if we close above or below a key level, above or below a zone, it's then invalid for me, and I no longer want to play it on the 30-minute time frame. So right here in the 30-minute, do we see any new level? Do we see anything new we like? We have this, a couple candles up right here, a little bit of consolidation before it, so we'll mark this zone out. This is the level that I want to take the market long at. And I'll show you how to play these levels kind of very, very soon here, guys. Let's look at our supply level from up here, see if anything can actually be added or changed. Yes, we're going to move this up right here and only get to that consolidation. And now we have our levels. And right here, pretty ugly action. No explosive move up, no explosive move down. So I'm not interested. So again, right here, we did have a new supply, right? With this little neutral candle before move up. But what happened, right? This candle closed above on the 30-minute time frame, invalidating this level and making me not want to trade it anymore. So how do we trade these levels? Let's just imagine we have supply up here. And imagine we have demand down here. So what I like to do is take the market long off demand, or short if we break underneath demand. And this is the opposite for supply. I'm not going to take the market short off supply, or long if we break above supply. How this will usually work is when we fall, I look at the 5-minute time frame. So we've fallen into demand, right? We're making these lower lows and lower highs. I'm waiting for the market to give me a higher high and a higher low for my entry. I'll put my stop loss right below and target maybe VWAP. I'll target any resting liquidity in the market, anywhere I can see price potentially reverse on me. And on the other side, if we're pushing down into this demand level, right, how do we know if it's going to break? Well, if it breaks, I look for a market to aggressively break demand, retest demand, right, for a short position. I put my stop loss on the retest and target again VWAP or any coming liquidity we might have. Now, how will we know if the market's going to break or bounce a key level? Very, very important. We're going to use a tool called volume, right? So with volume, what I'm doing is I'm waiting to see if volume is dying out or if volume is picking up as we're in the key level. So basically saying, let's say we fall down into demand, which just was demand right here, actually still is. We didn't mark this one out. How do we know if price is going to break or if price is going to hold demand? So I'm looking at volume. So as you can see, as we moved into this demand level, what happened with volume? It got weaker and weaker and weaker, right? As we move into supply, what happened with volume? It got weaker and weaker and weaker. Same thing that's happening right now. So if volume is getting weaker and smaller as we're coming into a key level, I'm looking for a reversal, versus if volume is increasing as we're approaching a key level, kind of like what happened with this one, right? We had a little bit of a level right here. What happened with volume? It picked up, went crazy as soon as we started approaching that level, so it had a little bit of a rise and we broke the level, right? So volume is showing me that we're going to break the level. Or increasing volume, we're looking for a break. If it's decreasing volume, we're looking for a reversal. Then again, my entries will always be on the 5-minute time frame. This is a great example of a trade we took today that was a break retest of all-time high on the ES. So on the ES, we had this all-time high supply right here from this aggressive move down, with the high being 65. So on the 5-minute time frame, we broke supply right here, or we broke the all-time high supply right here around these 65s, and this candle came back in and retested it. Now, looking at the footprint chart, what was the weakness in the retest? This is a candle that broke. A lot of volume. Volume was picking up from 17 to 22 to 22,000. Really good buying pressure. And the lower wick of this candle that retested the broken supply had dead volume. Remember, the footprint chart is showing us the histogram. It's showing us where most of the volume is, with the yellow little bar right here being the point of control. Most of the volume was on the upside. And as we came back in and retested that broken supply, we had weak volume. And this was my entry trigger. Now, let me show you a way to make these supply and demand levels even stronger. We're going to use something called imbalances on the footprint chart. So whenever supply and demand is printed, sometimes when we have abnormal activity, right? And if you're interested in trading footprint charts, want to know what it is, there's other videos on my channels I recommend you check out going all over the footprint chart. But basically, it gives us behind the scenes data for every single candlestick and any single time frame we want. So in the 30-minute time frame right now, when we draw our levels, we're going to also look at the footprint chart to see if we have any imbalances, just abnormal orders, one-sided orders sitting in the market. So if it's a green imbalance, it's a buy imbalance. And as we made this level, right, we had a massive one-sided offer right here where we've seen a massive amount of buyers. So you can use this to wait for price to tap back into that level, into the imbalance as an entry. All right, guys, let's go ahead and go through an example so we could test this out, right? Right here on the NQ, we have a very obvious supply level, right? Then we go in the 5-minute time frame. We wait for price to approach this supply level and give us an inverse structure. So we're going to wait, right, on a lower low, and we're going to wait on a lower high. Let's go ahead and fast forward this a little bit. Still bullish, still have no lower low, still have no lower high. We're still kind of in the supply level, still following a bullish 5-minute structure. So we're going to wait until we see a bearish structure come in. Right here, we just made a new low. Now let's see if we make a lower high. Right here is a lower high. Nope, we made a higher high. So we wait for price to show us exactly what we want. We had the lower low, but we didn't have the lower high. So we keep waiting, we keep waiting. New high was made. New higher low was made. So still not giving us what we want. There we go. We just made a new low. Let's see if we now make a new high. Or a lower high, actually. Perfect. We held a lower high from this low right here into a new low. Awesome. So now what do? We go ahead and enter the trade. We put our stop loss above the high, and we target any kind of resting liquidity and or VWAP that might be sitting in the market. And we let this play out. There you go. There's VWAP, there's a target, and we let the market play out to see if it'll go according to our favor. There we go. We're selling off. We got liquidity that we just hit right here. And that is exactly how you're going to play this setup over and over again. Now, if you have difficulties actually drawing these levels or using these levels, I actually have an indicator that automatically plots these levels out for me. You kind of tell how useful it would have been today if we're trading on the open to take longs off this demand level. And it basically goes through and automatically plots all these levels for you. You can kind of tell how actually accurate these are and when it comes to actually taking the market long or short. It even gives you delta spikes. It shows you when there's an abnormal activity in the tape. Not only that, but it'll give you the highest volume traded point for any specific day. I'll link that down below in the description. If you guys enjoyed this video or learned anything, please make sure to like and subscribe, and I'll see you in the next one.